Hello, everybody. My name is Mark Oliver, and I'm a financial coach and program coordinator at Metropolitan Family Service for the Economic Empowerment Programs. And I've recently been getting rather a lot of questions pertaining to student loans and some of the protections that have been implemented at the federal level to help borrowers during the coronavirus pandemic. And we thought it might be a good idea to collect all of those details and put them into a little presentation. And hopefully, that some of you find this useful to your own situations. So, without further ado, here we go with some of these details that I mentioned. Oops. Um, First of all, there was a federal act that was passed on March 27th called the CARES Act, which made some changes to how student loan payments are going to happen for about 6 months. The important things to note here are that there are some federal loans that are eligible and some that are not. It also does not extend any protections to private student loan borrowers. The list of eligible loans includes some very common ones, such as direct loans, plus loans, so both Parent Plus and Grad Plus, as well as federal family education loans or FELP loans that are held by the federal government. Loans that are ineligible, federal loans that are ineligible include Perkins loans, as well as commercially held FELP loans, those being originated by private lenders like Wells Fargo, Discover, and a few others. So obviously the biggest question to start with is how to figure out what kind of loans you have, and we're going to go through that very soon. And I've also broken this presentation down into about 5 different sections, dividing it up into different types of protections. So part 1 pertains to interest rate reductions are now 0% on eligible federal loans. That basically will be backdated back to March 13th of 2020. And it means that any payments someone makes on these eligible loans after March 13th will be applied to first to the previously accrued interest on the loans, and then once that's paid off, it'll go to principal. This interest rate reduction was originally planned to just last 60 days, but in the CARES Act, it was extended through the end of September of 2020. So September 30th of this year, there will be interest rates of 0 on these eligible loans. And again, it does not affect interest rates on private student loans or to any of those FELP loans or Perkins loans that are held by private lenders. So, how you can tell if your loans are eligible. First of all, most people have eligible loans, the vast majority of people. Perkins loans have not been made since 2017, and FELP loans stopped in 2010. If you have private loans, you're going to see that you won't see them in your federal aid system. You'll get a statement from Wells Fargo directly, or from Discover or PNC Bank, or from the universities that you attended in the case of Perkins loans. To find out who owns your loans, you can log into studentaid.gov, or you can take the other step of talking to a counselor at the Federal Student Aid Information Center at 1-800-4FED-AID. Waits at that 800 number have been pretty long prior to the coronavirus epidemic, so I think you might be better off if you're in a hurry to get the information from the website. In order to access studentaid.gov, first of all, you have to have a FSA ID, a Federal Student Aid ID. If you've logged into any Department of Education website since July 1st of 2014, you should have one of these. And if not, you can create one at a different website, fsaid.ed.gov. And if you have logged in, you have an FSA ID, but you happen to have forgotten the username and the password, you probably should be able to easily retrieve that just by attempting to log into student aid. That you do the forgot my password, forgot my username option. If you have to create one at fsaid.ed.gov, it will take at least 24 hours for that to take effect, and possibly up to 36 hours. That's because the Department of Education verifies your identity with the Social Security Administration in order to create the ID, so it can take a little bit of time. However, let's assume that you've successfully logged into studentaid.gov and are looking for the information about your loans. First of all, you're going to have a student aid dashboard on that website, which you can navigate to view details on your loans. When you click on that, you'll see on the top right an option to download my aid data. The file that downloads is actually a text file, somewhat difficult to read, pretty lengthy, but it has every possible detail you can imagine about your student loans, including who holds them, who your servicer is, etc. Once you have that downloaded file, you can search for each loan. You can search for the phrase loan type in the text file, and it will tell you whether or not you have a FFEL loan or direct loan or plus loan. Now, if it is a FFELP loan and you have questions about who holds it, search for loan contact type, current lender. And I'll show you some examples of screenshots of this on the next slide here. Just the way to tell the difference between federal loans and privately held loans. At the top, we have a commercially held federal FFELP loan, which is not eligible for CARES Act protections. Instead of specifying a lender, it actually specifies a current guarantee agency. In this case, American Student Assistance. And that's my neighbor's dog, Ginger, next door. She'll probably bark for a while. So I'm going to keep going with the dog barking. Now, a government held federal loan that is eligible for current protections will specify a current ED servicer like this one. This is an FFEL Stafford loan that is federally held. It says loan contact type, current ED servicer, Department of Education, Fed Loan Servicing. Fed Loan Servicing is a private company, but they do contract with the Department of Education to service these federally held loans. Part 2 here will be the protections related to suspension of payments. This is a little bit confusing, but the easy thing to say is that currently if you have the government-held loans, you do not need to take any action to stop payments, except if you have something like an auto pay set up with a private servicer. You're going to have to log into that servicer's account and end that payment. Typically, it takes 3 days to make changes to those types of things, so you want to do that in advance of your payment date. But if you stop that auto pay, a couple of things will happen. First of all, those non-payments will still count as qualifying payments for public service loan forgiveness and for the income-driven repayment plan loan forgiveness options, as long as you still qualify in other ways, like you're still working full-time for a qualifying employer, you're still serving as an AmeriCorps member full-time, etc. Each of these non-payments will also still be recorded or reported to credit bureaus as on-time payments for credit building purposes. So you won't be penalized, you won't see any delinquencies that show up on your credit report as a result of this. So again, this suspension of payments is totally automatic. You don't have to do a single thing for this to happen, except cancel your auto pay if you want to. Now, if you continue to want to make payments, then, like I said earlier, it's going to apply first to the interest that has accumulated prior to March 13th, and then to the principal of your loans. No interest is currently accumulating, but we'll get to that. Now, This part is the confusing part because on March 13th, there was a federal coronavirus task force press conference that declared a federal state of emergency, a federal disaster related to the coronavirus pandemic. And during that press conference, there was mention of an administrative forbearance that would be an option for people to stop making payments on their student loans. And it was implemented rather quickly, I mean, within a week, and it is actually an option for borrowers. It is separate from the payment suspension, which is important. You actually have to actively request the forbearance with your servicer. And if you are doing something like public service loan forgiveness payments, those will no longer, they will not count if you choose the forbearance. So if you are on PSLF or looking at income driven repayment plan forgiveness, it would probably be a better option to stay in your income driven repayment plan. Um, so doing nothing in this case is a better option. And really, in general, forbearance or deferment should always be a last resort because they typically will cause someone to pay a lot more on their loans over the course of time. Because every time a forbearance or deferment ends, some of your loans capitalize the interest that has accumulated during your forbearance or deferment period, which means any of that interest that accumulated during that time is added to the principal, and then your loan is a lot bigger, sometimes thousands of dollars bigger. So it's a good rule, I would say, to try to avoid forbearances or deferments in any situation. One more note on the forbearance that has been a question for some time pertains to this idea of capitalization. Because if somebody were to switch from an income driven plan into this forbearance, under the old system, the normal system, the interest would capitalize on their loans. And there have been a lot of consumer advocates and consumer lending advocates requesting that that not happen during the coronavirus pandemic. Finally got an answer on that issue last week from New York Times financial columnist Ron Lieber. He got the Department of Education on record saying that interest that has accrued prior to the CARES Act will not be capitalized, but he does suggest that maybe bookmarking his tweet here for the time when the servicers accidentally do it anyway, which is sort of a tongue-in-cheek reference to the fact that student loan servicers are probably one of the worst functioning public faces of any consumer lending in this country right now. They make a lot of mistakes typically. And the concern is that this will happen to 46 million borrowers, or the number of people anyway that sign up for the forbearance. So bear in mind that that should not happen. And if it does, you should be able to reverse that effect at the time. So October 1st, be on the lookout for this. Part 3 of the protections are the fact that there will be no collections on federal loans through September 30th of this year, which means that any garnishments that are resulting from student loans that are in default, or any treasury offsets, seizures of tax refunds, or federal benefits will not happen or should not happen until after September 30th of 2020. You can still currently enter a rehabilitation plan for a defaulted student loan or consolidate your loans in order to get rid of a default. And if you're being garnished right now, for example, you should contact your HR department because they are going to be the ones that are in charge of implementing this, changing the garnishment. And any garnishment that occurred after March 13th should be refunded to you. The big thing here, I think, thing that affects many of my clients is that now you can file taxes without risk of losing your refund. So this is a really good opportunity to access the earned income tax credit and a sizable tax refund for possibly the first time in a couple of years. Um, Currently, you can file for free with the IRS free file at this link here, free file with the IRS. There is actually also a volunteer income tax assistance available online for free at getyourrefund.org. And we should also comment here that there's been an extension of tax filing deadlines by the IRS and the state of Oregon. You don't need to file until July 15th. And you also don't need to file an extension in order to get there. You can just file your taxes July 15th. Doing so sooner obviously means that you'll get your refund faster, and also the other benefit of the CARES Act, which was the $1,200 uh, coronavirus payment, assuming you're eligible for that. Now, for private student loans, this is kind of a quick one because there are no specific protections in the CARES Act. However, on a positive note, there are some private student loan companies that are providing varied forms of relief to borrowers that are affected by COVID-19. So if there's any financial hardship in your household resulting directly from the coronavirus, we'd recommend that you reach out to your lender and see if see what kind of payment relief options they're offering. And then a few odds and ends suggestions for going forward here. I think we're just gonna, this first one is really just a summation that if you've lost income for any reason, including the pandemic, any reason, loss of job, anything like that, you can stop making your payments through 9/30, September 30th, without any repercussions. If your annual date to recertify your income for an income-driven repayment plan is between March 13th and September 30th, you should probably still do so because if you're on certain income-driven repayment plans and they end, the interest will capitalize on those loans. So that's another step you should probably take if you're on an income-driven repayment plan. And if you're not on an income-driven repayment plan, but you'd like to be, you can still use the studentaid.gov website to apply for one, just like you always could. As I mentioned, it's probably a better option for most people than a forbearance. It can result, especially if you've lost a job or if your income has gone down, it could result in something like a $0 payment, which looks very much like a forbearance, but it happens to not be. It actually is reported for credit building purposes to the credit bureaus. And just one little tip on income-driven repayment plans. There are several of them, many of them actually. In many cases, the revised pay-as-you-earn plan, or REPAY, R-E-P-A-Y-E, often has the best interest subsidies as well as the smallest payment amounts. So it's a good one to look at when you're signing up on studentaid.gov. You can compare the details of each plan kind of side by side. That's one of the more useful aspects of that website. You can see what you're in for. But REPAY, just bear in mind, has better interest subsidies on both subsidized and unsubsidized loans. And that's all I have right now. So that's a lot of detail, kind of a information dump, I'm afraid, but I hope some of you find this useful, and that please feel free to reach out to one of our economic empowerment team to get any details or to talk over your specific situation. And thanks very much for your time. I hope everyone's safe and sound and with their loved ones. Take care.